Next, you learn the most important step to running payroll successfully: setting it up. Running payroll is quick and easy if you set it up correctly. As you'll learn, QuickBooks Payroll makes this easy and even provides free technical support to help you get set up and running. In this chapter, you begin to set up payroll from scratch. There are 4 steps to set up your payroll. Step 1, sign up for an Intuit payroll service. Step 2, work through the payroll setup interview. The interview takes you step by step through the process. QuickBooks asks the question, you answer the question, and click Next. It's that easy. You learn Step 3, setting up payroll preferences, and Step 4, setting up payroll schedules, during Chapter 3. We assume you have a good working knowledge of QuickBooks in general. If you don't, or if during this class you feel like you'd benefit from knowing QuickBooks better, we highly recommend Mastering QuickBooks Level 1. Step 1 is to select an Intuit payroll service. You see the payroll services listed in your manual in Chapter 2. The first option is called Basic Payroll. It's designed for companies who want to pay employees but don't want to bother with tax filings. Instead, these companies work with their accountant on their taxes. With this service, you do payroll in-house. This means you set up payroll, enter employee time, process paychecks, and do tax deposits. Then, your accountant helps you with tax filings. Intuit provides you with up-to-date federal and state tax tables so tax calculations are correct. And QuickBooks automatically checks to see if any new tax rates are available and prompts you to install them before running payroll. The second payroll option is Enhanced Payroll. This service is perfect for the true do-it-yourselfer. It's designed for companies who want to manage the whole payroll cycle in-house. This service offers all the features of basic payroll plus much more. Enhanced Payroll automatically fills in the latest federal and most state payroll tax forms for you. Just print, sign, and mail. Or you can conveniently file federal and many state payroll tax forms electronically. Enhanced Payroll also has a built-in method for tracking, reporting, and calculating workers' compensation. The third payroll service is perfect if you don't want to bother with paying taxes and filing complicated payroll tax forms. This service is called Assisted Payroll. The word assisted really describes this service. You do the easy part of the payroll in-house, then Intuit's payroll service assists you by finishing the payroll process. Here's how it works. You set up payroll in QuickBooks. Each pay period you pay employees. Then you send the data to Intuit via the internet. Intuit takes over from there. When they receive your payroll information, they send you an electronic receipt and automatically update your accounts in QuickBooks. Then Intuit transfers the funds from your bank account to make tax deposits. Next, Intuit files the appropriate payroll tax forms on your behalf. Intuit also offers one additional option with any of the payroll services: direct deposit of paychecks. You enter bank account information for employees, and Intuit automatically deposits paychecks into their accounts. For this training, we'll use Enhanced Payroll. Enhanced Payroll is a do-it-yourself service that provides the calculations and forms needed to process payroll in-house. This includes e-filing and e-payments and printing tax forms like the 941 and W-2 directly from QuickBooks.
Let's begin the Payroll Setup Wizard. From the menu, choose Employees and select Payroll Setup. QuickBooks opens the QuickBooks Payroll Setup Wizard. Remember, setting up payroll is the key to running payroll successfully. That's why you get free payroll support, even during setup. And if this is the first time you're paying employees, we recommend you click this link to learn more about being a new employer. In your manual in Chapter 2, you'll notice there is a payroll setup checklist. You can access the same checklist by clicking this link. In the introduction to the payroll setup, the first question is, have any of your employees received paychecks from your business? In the first choice, you tell QuickBooks that at least one employee has received a paycheck. Notice that when this option is selected, the payroll setup contains 7 steps. The second choice is to tell QuickBooks that the company has not issued paychecks. In other words, you're switching from different software, or perhaps a manual system. The key point is that you've run payroll during the calendar year. Notice that there are now 5 steps. There's also an additional question to answer. Do you need to pay employees today? Make the appropriate selection here. In this case, we'll select the first option up here to see all steps in the setup process. We'll go through all these steps in this chapter. Let's move to step 2 of the payroll setup interview. Click Continue. In the next step, we complete the company setup. This means we set up compensation or pay like salary and hourly wages, and employee benefits. Let's begin with compensation. Click Continue. Peeking behind this window, notice that QuickBooks does not have any entries for compensation. If this file were already set up, you would see a list of your existing payroll items. Use this window to add a new compensation. By default, QuickBooks checks salary, hourly wage and overtime, and bonus, award, or one-time compensation. Build'em doesn't pay bonuses, so click to clear this checkbox. We continue the company setup in the next topic. Let's continue setting up compensation. Click Finish. We selected salary and hourly, but notice that QuickBooks has created 4 payroll items: double time hourly, hourly, overtime hourly, and salary. If you don't want some of these items, or if you want to change their names, you can do so easily. For example, Build'em does not pay double time. Click Double Time Hourly and click Delete. QuickBooks asks if you really want to delete the payroll item. Click Yes. We do pay overtime, but we don't want our employees to see it written this way: overtime times 1.5 hourly. Click the item and click Edit. Then type the name that you'd like to use. In this case, overtime. QuickBooks automatically takes the dollars that you pay someone for overtime and sends it to an expense account. Specifically, an account called Payroll Expenses. You'll learn more about this later. Click Next. In this window, QuickBooks asks, how do you pay overtime? In this case, time and a half is correct. Click Finish. Now we have hourly, overtime, and salary. At this point, we've set up very basic payroll items. You'll learn more about complex payroll items and more about payroll items in general later in this training. Let's continue the company setup by setting up employee benefits. Click Continue. In this step, we can set up insurance benefits, retirement benefits, paid time off, and miscellaneous benefits. Click Continue. Use this window to add new insurance benefits. In this case, let's set up health insurance. Notice you can also set up dental and vision insurance. QuickBooks Payroll also makes it easy to set up group term life, health savings accounts, medical care FSA, and dependent FSA accounts. Please note, real-world training recommends that you consult an accountant or tax professional if you're not sure about these different kinds of benefits. In this case, though, we're just setting up health insurance, which we'll continue doing in the next topic. Let's continue setting up health insurance. Click Next. QuickBooks asks, does the company pay for all of the insurance? Or is it shared? In other words, do both the company and the employee pay portions? In this case, our employees pay for all of the insurance. Now QuickBooks wants to know, is the employee portion deducted before or after taxes are calculated? This is an extremely important question. Please do not answer it if you're not 100% sure. Essentially, QuickBooks is asking whether it should deduct the health insurance before or after it calculates taxes like federal withholding. There is only one instance where you can deduct health insurance payments before calculating taxes, and that's if you're part of a Section 125 plan or cafeteria plan. please consult your accounting professional to make sure that you have a cafeteria plan before selecting this option. Build'em doesn't have a cafeteria plan, so the payment for the health insurance is deducted after QuickBooks Payroll has calculated taxes, meaning it's deducted from the net check. We'll continue setting up health insurance in the next topic. Let's continue setting up health insurance. Click Next. Who do you pay this check to? In this case, we pay our health insurance to California Medical. In the account number field, type in the number that identifies you to the insurance company. This account number appears in the memo of the check that you would send to California Medical. It's a number that helps them identify who you are. Next, tell QuickBooks how often you have to pay California Medical. Build'em pays health insurance monthly, and we have to pay it before the 15th of the next month. Click Finish. We don't want our employees to see that the health insurance is taxable, so let's edit it to say simply health insurance. Click Edit. In the first field, let's remove taxable. This is how the item will appear on paychecks. This is also what will appear on payroll reports. Click Next. And click Next again. With medical insurance, you're withholding money from your employee. It's not your money, but you have to store it somewhere before you pay California Medical. That's why that money is sent to a liability account. This indicates that you owe the money, and the specific account that we use is payroll liabilities. QuickBooks sets up and uses this account by default. Later in this training, you'll learn how to change the account that this deduction flows to. We're almost done setting up health insurance. Click Next. In this case, because Build'em doesn't have a Section 125 plan, there is no tax tracking. In other words, we're deducting this money from the net check after all the taxes have been calculated, so we don't have to assign any special tax code or report this to anyone. In this case, use the standard tax settings. Click Next. Now QuickBooks wants to know how should it calculate the amount for health insurance. There are multiple choices. You can base it on hours, or only the hours worked. In other words, no vacation pay. Health insurance is usually a flat amount. And let's say that the default amount for all employees is $75. You might be wondering what happens when an employee has their spouse and children on their health insurance. Won't they have to pay a bigger amount? This is the default amount that'll be used for all employees. However, you can change the amount when you set up an employee. Is there a limit type? In other words, an annual limit. With health insurance, there is no annual limit, so click the drop-down arrow and select No Limit. Click Finish. We've now set up health insurance. Let's set up the retirement benefits for Build'em Construction. Click Continue. QuickBooks Payroll asks about your company's retirement benefits. You can choose from all the different types of retirements available, including simple IRAs, 403(b)s for nonprofits, and even complex benefits like 408(k)(b) SEP IRAs. Let's set up a 401(k), the most common retirement benefit. Click Next. In the Payee Vendor field, enter the name of the payee to whom you write the check when you pay the 401(k). We're calling our vendor 401(k) Administrator. In the Account Number field, enter the account number you want to appear in the memo of the check you send to the 401(k) Administrator. This number identifies you when they receive your check. Next, tell QuickBooks Payroll how often you have to pay your 401(k). In our case, it's monthly, and it's due on the 10th. For the previous month's liabilities. In the next topic, we'll continue setting up this retirement benefit. Let's continue setting up our retirement benefit. Click Finish. Notice that QuickBooks Payroll automatically set up two 401(k) items, one for the company match and another for the amount coming from the employee. To better understand these, let's edit them. Click 401(k) Employee and then click Edit. On the paycheck, employees will see 401k employee, which makes sense. Click Next. Here's the information we already entered. Click Next. Now here's something interesting. When we deduct money from the employee, it's not our money. We owe that money, which is why the money is stored in a liability account. And remember, QuickBooks uses payroll liabilities by default. Again, we'll see how to change this later in the training. Click Next. QuickBooks asks which taxes apply to this item. The good news is you don't have to understand all the tax consequences. QuickBooks Payroll automatically selects 401k for the tax tracking type. This means it will place it in the correct position on W-2s and 941s. In this case, we want to use standard tax settings. Click Next. QuickBooks asks how you would like to calculate the amount. In this case, the default rate is probably 0. Why? Because each employee is going to want to deduct or withhold a different amount for their 401k. Instead of choosing Do Not Calculate, in most cases, a 401k is going to be based on a percentage of the pay. There is a default limit on 401ks. However, the limit can change from employee to employee based on their age. In other words, certain employees are able to withhold a larger amount for 401ks if they are older. So we'll leave this field blank here. We'll fill in the annual limit when we set up each employee. Now let's finish setting up our retirement benefit. Click Finish. Let's look at the 401k company match. Click Edit. You could change this name if you want, but in this case, the name works. Click Next. Once again, we see the information we entered earlier. Click Next. Now here's where it gets different. This is not money that we're withholding from the employee. Instead, the company is incurring an expense, which is why the amount of the company match comes from an expense account, specifically payroll expenses. Again, we can change the name of this account, and we'll do so later in the training. Once we've incurred the expense, we don't pay the 401k administrator right away. In fact, we owe the money. That's why once we've incurred the expense, we have to store it until we pay it in a liability type account. And again, the default account that QuickBooks Payroll uses is payroll liabilities. Click Next. Here's a bonus of using QuickBooks Payroll. You don't have to worry about tax tracking. QuickBooks automatically knows how to track and show 401k company matches on W-2s and 941s. So we'll just leave this setting, Use Standard Tax Settings. Click Next. In this case, the calculation is going to be based as a percentage of pay. We'll leave the default rate as 0 because it will be different for each employee. And we'll do the same for the default limit. Click Finish. Now you've set up your 401k company match and your 401k employee contribution. Now let's set up our employees. Click Continue. Before you begin, make sure to gather the W-4 information that you'll need for all your employees. Click Continue again. Let's add our first employee. His first name is Pete, and his last name is Smith. Let's enter his home address, 1278 Main Street, and he lives in Dallas, Texas, and the zip code is 75240. Click Next. He is a regular employee. The other choices here are Officer, Statutory, and Owner. If you're not sure what type to select, consult your tax professional. His Social Security number is 1, 2, 3, 4, 5, 6, 7, 8, and 9. His hire date is January 31st. At this point, he has not been released yet. However, the release date does become important, and you'll learn why later in this training. Now we'll enter his birth date, 9/28/1974, and his gender is male. Click Next. Tell QuickBooks Payroll how often you pay Pete Smith. Build'em pays all employees semi-monthly. In other words, they get a check 2 times per month. Pete is a salaried employee, and the salary that he earns is $50,000 per year. Notice that if we wanted to, we could put the salary in by month or paycheck, but it makes sense to enter the annual salary and let QuickBooks do the calculation for us. This is the overtime item we set up earlier. Pete is not eligible for overtime, so don't check this box. We continue setting up employees in the next topic. Let's continue setting up our first employee, Pete Smith. Click Next. QuickBooks Payroll asks about additional items for Pete Smith. Pete is going to take part in our 401k, and we're going to match him. He also gets a reimbursement for his cell phone, and he'd like to partake in our health insurance. Now we can put in the amounts that are specific to Pete. He's asked to withhold 3% for his 401k. Press Tab. Our annual limit for this year is $19,000. Please check with your tax professional if you're not sure about the annual limit for 401ks. The company match is 2%. Check with your accounting professional regarding the annual limit for company matching. Press Tab. The annual limit for the company's contribution this year is $51,000, or 100% of that person's income, whichever is less. Pete earns $50,000, which is less than $51,000. So the limit for Pete is $50,000. Don't worry if this is confusing. In most cases, if you have a 401k plan, ask the 401k administrator to give you this information or help you set up these limits for each employee. Remember, there is no annual limit for the cell phone reimbursement and no annual limit for the health insurance. However, Pete wants to add his family, so instead of $75, his premium is $150. We continue setting up our employee in the next topic. Let's continue setting up our employee, Pete Smith. Click Next. QuickBooks Payroll asks how sick time is calculated for this employee. Remember, we set up sick time, but we call it PTO, or paid time off. In our case, Pete earns a total of 40 hours, or 1 week. He earns that at the beginning of the year. What do you do with unused PTO? In this case, we tell QuickBooks that it must be used or it's lost by the end of the year. We told QuickBooks that Pete would get 40 hours at the beginning of the year, but now we need to define the beginning of the year. In this case, we're going to choose January. And the date will be the 31st. That's the anniversary of when we hired him. And this relates to the next question. Right now, Pete Smith earns time off. In other words, he's already earning PTO. But that's not the case because we just hired Pete. So tell QuickBooks Payroll that he will not earn any time off until the end of his 2-month probation. That will be the end of March. There are currently no balances. In other words, we just hired Pete, so he has no hours available. So leave both these fields blank. That's all we need to set up Pete's PTO. We'll continue setting up the employee in the next topic. Let's continue setting up our employee. Click Next. Now we set up the payment method for Pete. Here we can choose to pay Pete by direct deposit. Notice you can choose to deposit directly to his bank account or provide a direct deposit pay card that Pete could use like a credit card. In our case, we're going to give Pete a check, so click Next. Now tell QuickBooks Payroll about the taxes that Pete is subject to. He lives in Texas, so his withholding is Texas. And the unemployment tax is also going to be for Texas. The next question is, while working for you this year, did Pete live or work in another state? No, he didn't. So click Next. Now we enter the federal tax information. This is information that you get from the W-4 form that Pete will fill out. Pete is single, Based on the calculation on his W-4, he has 3 allowances. He does not want any extra withholding, but if an employee would like you to withhold extra money, you can fill in that amount in this field. In this case, the non-alien resident withholding does not apply to Pete, and he is not a qualified employee for the Hire Act exemption. Pete is subject to Medicare, Social Security, and federal unemployment. These are the choices for most employees. Click Next. Now we'll do the state taxes. Pete is subject to unemployment tax. Next, QuickBooks asks if Pete is subject to any special taxes not shown. Select No. Please note, the questions you answer and selections you make in this window will vary by state. If you're not sure what you should select when setting up your employees, talk to your accountant. Click Finish. Congratulations, you've successfully set up your first employee. Now let's set up paid time off. Click Continue. QuickBooks Payroll asks, what kinds of paid time off do you provide? Perhaps you don't provide any time off. Or you provide sick time, vacation time, or both. You can select both, but what's becoming quite popular is to provide your employees simple paid time off or PTO. In other words, the employee can choose whether to use the time for vacation or sick time. That's what we'll set up here. To do that, we'll choose just one item, either sick time or vacation. It doesn't matter which one you choose because we're going to rename it PTO or paid time off. So in this case, we'll choose sick time. Click Finish. Notice that QuickBooks added 2 items, one for our hourly employees and one for our salaried employees. Let's go ahead and change the names. Click Hourly Sick and select Edit. Let's change the name to PTO or paid time off. To distinguish it from the salary PTO, add -hourly. Remember, when we pay someone, it's going to be an expense, which is why money is coming from an expense type account, called payroll expenses. Click Finish. And let's do the same for salary sick. Click Edit. And change the name to PTO. And add -salary. Click Finish. At this point, we've only set up the items to pay our employees for PTO time. You learn how PTO time is accrued later in this training. We're almost finished with employee benefits. All that's left is miscellaneous. Click Continue. QuickBooks Payroll asks you about anything else that might affect your employees' paychecks. This includes additions, or money that would increase the paycheck, and deductions. Under deductions, you see wage garnishments, union dues, and so on. We'll cover some of these later in the training. And under additions, you see cash advances, taxable fringe benefits, and so on. In this case, let's add one that we don't see. It's a common question that we get from students at live seminars. I want to reimburse my employee for their cell phone. In other words, the employee pays the cell phone bill, but the company wants to reimburse them. So in this case, we'll choose Miscellaneous Addition. Click Finish. QuickBooks calls the addition Miscellaneous Addition. That's not quite accurate, so let's edit the name. Change it to Cell Phone Reimbursement. Remember, this is a cost to the company, so the account type is expense. However, it doesn't make much sense that the cost for a cell phone would be considered a payroll expense. Let's point the dollars at a different expense account, telephone expense. Click Next. The tax tracking type is none. In other words, we're simply reimbursing our employee who used after-tax dollars to pay for their cell phone. This is not considered compensation. If you click the drop-down arrow, you'll see that the options include compensation and many other choices. But in this case, the correct choice is none. And we're using the standard tax settings. Click Next. How would you like to calculate the amount? In this case, it's probably going to be a flat amount. The default rate might be a set amount that you offer every employee, let's say $50. However, if you do give an employee a different amount, you may want to leave this amount blank and enter it on each paycheck. Or, if it's an amount specific to each employee, enter it when you set up that employee. There is no annual limit with a cell phone reimbursement, so click the drop-down arrow and select No Limit. Click Finish. Now we've set up our cell phone reimbursement. Next, we'll set up our employees.